Well, as expected, Zero Hedge is keeping up very well with the vote over in Italy, which is taking place Sunday evening, which is when I'm doing this video. And it's now official, the Renzi government, who this particular guy, he's running the show over there, is that Prime Minister or whatever they call him? Yeah, Prime Minister Renzi said, if this referendum is a no vote, I'll step down and yada, yada, yada. The yes vote would essentially mean the club, if you will, stays in power. Some changes to their government will take place. Things that would make it easier to, well, I should say for the club to pass laws, keep them in place, not have to deal with the Senate or whatever over there too much. And the people said, nah, I think you guys have enough power. I think you got enough power. We've had enough. So, resounding no vote. So he has officially stepped down. Don't know if pre-markets are open yet. Is there pre-markets right now? Taking a little peek. Don't know that this is 8/20, well, 8/23, yeah. Sunday, December 4th. NASDAQ down 17. We got Dow down 30. S&P 500 down 6, whatever. We'll see how that goes. But so there's two articles that kind of cover this. Now remember, Webbot was telling us, pay attention to the Italian banks. There's going to be some problems with the Italian banks. I've done a few videos in recent times about this as the news came out. And Monte dei Paschi di Siena, Italy's troubled number 3 bank. The things that I've been reading were kind of suggesting, I guess, that if it was a yes vote, this guy Renzi stayed in office or what have you, it would have made the path easier to bail out the Italian banks. See, because Webbot was painting a picture, again, if it's the interpretation's right or whatever, but its interpretation was that maybe not going to be a bailout. There's going to be some problems. That's what when I did the summaries, that's what I gathered myself as well, reading that. So it would almost seem expected that Renzi is not going to stay in office and that the no vote's going to take it, which is what has just happened. Which then means, what about this bank? Or not just that bank, some other banks that are in trouble too. It's never, ever, ever just one bank, because it's never, ever, ever just one bank who's cooking their books. Sleight of hand accounting practices, if you will. So, all eyes on Monte Paschi, whose bailout is now in doubt in Italian bank sector contagion. As Zero Hedge noted last night when they previewed the virtually assured no vote, we said that a strong no vote will cause Prime Minister Renzi to resign, leading to political instability in Italy. Furthermore, a no vote is expected to kill a long-running attempt to rescue Italy's third largest and oldest bank, Monte dei Paschi, which has been desperate for a private sector bailout ever since it failed this summer's ECB stress test to avoid broader banking sector contagion. A failure of Monte Paschi will likely spark a fresh Eurozone banking crisis and prompt the ECB to get involved again, as it warned it would do, in a redo of what happened after the Brexit vote. So, notice how this said, a failure of Monte Paschi, the one bank, will likely spark a fresh Eurozone banking crisis. So one bank is going to cause a Eurozone-wide banking crisis? Love how they say that. It's just one bank, but the problem with it will cause, worldwide problems, essentially. Because again, even if it's just the Eurozone and it's one domino falls, another one falls, as far as banking problems goes, needing bailouts. We saw what happened in 2008 and 9. Well, we're interlinked nowadays, so we have to bail out the European banks too, which we did. And everyone had a big bailout party across the world. So are you going to tell me that this time it's just EU zone, that's all. Italy, the bank's got a problem, but it's just going to be contained over there. Not on your life. Sure enough, as the Wall Street Journal wrote moments ago, when markets open Monday morning, all eyes will be on Banca Monte dei Paschi di Siena, Italy's trouble number 3 lender, which is considered particularly vulnerable to fallout from a no vote, which could complicate its plans to raise capital. Investors will be watching closely for any signs of a run on the bank, a situation that could force the government to move quickly with emergency measures. For those who have not been following the seemingly endless bailout saga and growing crisis at Italy's third largest and most insolvent bank, here is the quick rundown. 2007, Monte Paschi buys Banca Antonveneta for 9.3 billion euros. 2011, European stress test finds the bank has a capital hole of 3.3 billion euros. 2012, MPS's chairman and top management are replaced. So Monte Paschi's chairman and top management were replaced. 2013, the lender borrows 4 billion euros from the government to stay afloat. June 2014, MPS raises 5 billion in fresh capital and pays back 3 billion of the government loan. November 2014, new stress tests find the bank the worst capitalized lender in Europe. The European Central Bank takes over as its supervisor. The bank is officially declared up for sale. 2015, MPS raises 3 billion euros in fresh capital and pays back the rest of the government loan. 2016, announces plan to raise $5 billion and sell 28 billion in bad loans. Now, let's talk about that one for a second. 2016, that's this year, they've announced, this bank, a plan to raise $5 billion and sell $28 billion euros in bad loans. How does one sell $28 billion in bad loans? Who in the hell is going to buy bad loans? The same, though, I've got a bunch of bad loans on my books. Well, I'm JSNIP for the bank. JSNIP for the bank has an enormous amount of bad loans on his books. And it's this particular book, this imaginary book in my hand. I'm going to now go out and market this book. I want to sell this book. Who the hell would want to buy it? JSNIP Bank, why are you're selling these? We know why you're selling them, because they're bad loans. But if they're bad loans, we don't want them, because they're going to become bad loans on our books. We're not going to pay you anything for that. Oh, we'll take them from you if you want, but we're not going to pay you. Well, what happened in America? The Federal Reserve stepped up. Federal Reserve will buy all those bad loans, toxic assets, as I've always called them, because that's what they are, for 100 pennies on the dollar, 100 cents on the dollar. That's like buying a brand new car. Whatever one loses the most value the second you drive it off the lot, that's the one I'm talking about. And then you have the ability, after years of having this car, you just bought it, brand new off the lot in 2016, years go by. I need to get rid of this toxic asset. I still owe more on the car than I can actually sell the damn thing for. That's okay. Federal Reserve will step up. Not only are we going to buy that car from you, Mr. JSNIP, we are going to give you the full asking price that you paid when it was brand new. How's that sound? That sounds fantastic. If I'm a too big to fail bank, that's how it goes. You or I, on the other hand, there ain't a chance in hell that happens to us. And then the government will tell us, well, we had to do it. It was systemically important. It would cause a chain reaction. We had to do this. This is not something we normally do. Oh, wait a minute. You did do it. You did it in 2008 and 9. Now you're saying you got to do it again. So hold on. Wait a minute. What's happening here? We had a massive increase in our debt across the world. 20 trillion. It's, by the way, the latest number I said when Barack Obama leaves that White House, we could very well be at $20 trillion. Last time I checked, yesterday, 19.9 trillion. You could be rest assured when that guy leaves office, it will be at $20 trillion. So I have another video to do after this about that. And that is what is Barack Obama leaving the next president with? And it could have been Hillary. It wouldn't matter. And they've got the charts, and they tried, some of the mainstream tried to get out on Zero Hedge for covering it, and there's no source, and Zero Hedge fake news. And Zero Hedge got the information and charts from the Federal Reserve. Talk about the all-time backfire on the lamestream media. Oh, what were your sources? Our sources were the Federal Reserve. Here's the charts. Oh. Ooh. Oh, okay. Sorry about that. So, another article about this, though, with this guy Renzi resigning and what maybe possibly we could expect. It says, to summarize, this is what has happened. So yet another major blow to the European political status quo. Italy Prime Minister Renzi lost by a huge margin, with the latest estimate somewhere around 59% voting no to Renzi's proposed constitutional referendum. Number two, in a speech moments after the results were announced, he confirmed he would hand in his resignation tomorrow, adding he isn't available to lead a caretaker government. In a blow to many sell-side forecasters, he would do just that. Number three, as Bloomberg notes, the scale of the loss and how quickly it happened cast a huge shadow on the fate of the continent headed into 2017. Number four, Italy's opposition parties, from Grillo's Five-Star Movement to Calvini's Northern League to Berlusconi's Forza Italia, seem to be aiming for early elections as soon as possible, after making a few tweaks to the current electoral law. Grillo said this can be done in 1 week. So it's interesting. What do they want to change with this law? Well, it turns out they made a change to a electoral law which would benefit them a little bit. But now that they're not getting themselves, the club, put back into power, that law may work against them. So they want to remove it as quickly as possible before the new guy takes over. Okay, that's what that's about. The blowout result of the referendum is a confirmation that anti-Euro populists are ascendant in Europe. Expect more long nights in the months to come, especially in France and the Netherlands, which are the two next big potential dominoes to fall. What's next? According to Bloomberg, Italy is in for a period of high instability. The prospect of a prolonged, bitter electoral campaign won't do any good to the country's already anemic recovery, not to mention its battered banks, who may have to ask for public aid. The euro dropped against the USD to the lowest level since March 2015, sliding under 1.05 briefly, but has since recovered some of its initial losses. Quote, "The experience of my government ends here," Renzi said in a televised address to the nation after early voting results suggested his yes camp may have lost the referendum by as much as 20 points. Meanwhile, not wasting any time, the man who would likely win an election if one were held today, and that's the Five-Star founder Beppe Grillo, said in a blog post that Italians need elections as soon as possible, adding that the election law for the lower house can be the current one, even though the movement has always criticized it, and says a new election law for the Senate with tweaks to make it more governable can be done in 1 week. At the same time, Italy's Salvini, leader of the Northern League, smelling blood and an opportunity to pounce, said he was ready for elections with any law, according to ANSA. So the current law or the one you want to change it to, it doesn't matter, we're ready. That's what they're saying. Expect volatility premiums to rise and the euro to trade below 105 against the dollar, potentially testing last year's low of 104.6 in a no-vote scenario, which again, this is exactly what we've had. While the market is positioning for the risk of no vote outcome, a knee-jerk reaction is still likely to be a lower euro as it would underline the upcoming risk of the elections in Europe. So I'm going to end it here. It just makes me think of that guy Wilkerson, last name Wilkerson, the prophet dude, whatever. And Lindsay had quoted this guy a number of times, and I did ask Lindsay when I spoke with him on the phone, and I believe I covered this with you guys about that. I said that, because he said the euro would go first, and then you'd have a few weeks in America to get your financial house in order before it would come here. And I mean, we're seeing $1.05 against the euro. This is insane. That thing should be a 125, 130, 132. It's 105. So I always think about that. But I asked him, I said, you never did say where that information came from. Was that your elite friend or someone else? He said, no, that was not my elite friend that said that. That was from, he said, there's a prophet guy. And I said, oh, Wilkerson? Yeah, yes, Wilkerson. I forget his first name. He said, yes, it was Wilkerson. He was the one that said that because I've read that where he talked about the Eurozone going first. But not in the same exact words, I guess, Lindsay had used at the time. But he said, no, that was from this guy, Wilkerson. That was not from his elite friend. His elite friend never said anything about the Euro going first and we'd have a few weeks and that kind of thing. Speaking of which, Wilkerson, prophecy. Euro. David Wilkerson. David Wilkerson's economic vision. Now this was from 1994 when he first made this. It's about, and matter of fact, I think I'm going to dedicate another video to this. I want to read this in full, and I wouldn't be able to title this video right to catch your attention on that subject. So I'm going to do another video on this one. Take care.